Good day, Junior Tickies. I'm Mrs. Brimacombe, and we are going to focus on adjustments looking at stock losses. Trading stock loss can be due to theft, damage, water pipe burst, stock is obsolete. These are all examples of trading stock losses. What is important to know, when we have trading stock losses, we need to indicate that lost. So the original amount will always go into the trading stock account. Loss due to whatever the reason it might be will be debited. Now our claim, if we do have insurance, it means we need to claim from our insurance and they will pay out a percentage of the loss. It could be 100% or it could be only some of it. So when the insurance company pays us out, our bank account will be debited. Irrelevant if bank has a favorable or unfavorable bank balance, bank is always debited. What the insurance company is going to pay us out, if we haven't received the money yet, we need to take it to accrued income. The difference in the loss due to account, the original minus the claim, will equal our loss. To show the effect on the accounting equation, the original price, my asset account, will be minus, and the effect on the owner's equity minus. What the insurance company is going to pay us out, or did pay us out, assets plus, owner's equity plus. If the business had an unfavorable bank balance, remember, effect on the accounting equation would then have been liabilities minus if the insurance company did pay us out. So these are just a few pointers to remember when we're looking at trading stock losses. Activity 8. Required to show the effect on the accounting equation and indicate how it will appear in your financial statement. Adjustment. Stock to the value of 6,500 was destroyed in a fire. The insurance company agreed to pay 4,500. So step number 1, we need to show the original cost of the stock which we lost. That's why we need to open up trading stock and loss due to fire. Trading stock, we have a balance brought down from the pre-adjustment trial balance. Loss due to fire is going to be debited and trading stock is going to be credited. Effect on the accounting equation, assets minus 6,500, owner's equity minus 6,500. To show what the insurance company agreed to pay us out, accrued income will be debited with 4,500 and loss due to fire is credited with the same amount. Effect on the accounting equation, plus 4,500 assets, owner's equity plus 4,500. Because our expense decreased, it has a positive effect on the owner's equity. If I close off loss due to fire to the profit and loss account, it will reflect our actual loss, which is equal to 2,000. Please remember, you cannot just take 6,500 minus 4,500 and show it in your trading stock account. That is a common mistake. You always show the original loss in the trading stock account. In my financial statements, loss due to fire will appear in my income statement. It will form part of the operating expenses. And inventories, trading stock, my new balance, 443,500. And then I've got accrued income, trade and other receivables. That will be note number 5, 4,500. Activity 9. Again, we need to show the effect on the accounting equation and indicate how it will appear in your financial statements. So now I've chosen an activity which you can expect at grade 12 level. Similar as before, stock was damaged, but this time due to a water pipe burst. A claim was lodged with the insurance company. They agreed to cover 85% of the loss. The payment of $6,375 from the insurance company has not yet been received. So yeah, it's important to take note of the fact they agreed to cover 85%. They provided us with the payment amount which they agreed to pay out. This means I don't know what's the original cost of the stock which I've lost. And is it important to calculate? Yes, because adjustment B says the trading stock on hand as per physical stock count amount to 88,000. So we need to compare that with our new updated balance. So if I look at what have they provided me with? The original is always equal to 100%. The claim, they agree to cover 85% of the loss, which means the loss is equal to 15%. The amount given to us, what the insurance company agreed to pay out, is $6,375. So if I want to calculate the original amount, we're going to say 100 divided by 85. What is it that we want to calculate over what has been given? Now, if I want to calculate the loss, I can simply take 7,500 minus 6,375. Or I could have said, if I'm doing income statement, I could have said 6,375 times 15 divided by 85. It gives me exactly the same answer. So starting with the original amount, or no, what we're actually going to start with is what is it that they provided me with. They provided me with the accrued income, the amount they're going to pay us out. So accrued income is debited. Account credited, loss due to water pipe burst. To find out, which we've already done, the original amount, the loss due to water pipe burst will be debited, 7,500. Account credited, the trading stock account, loss due to water pipe burst. Now, the trading stock account has a balance brought down from the pre-adjustment trial balance, 98,000. So, opening balance. According to the physical stock count, our closing balance should be 88,000. Now, we need to compare that with our new updated balance. So, if I take 98,000 minus 7,500, it equals 90,500. So, it's clear that there's a trading stock deficit. And the difference is 2,500, which will go to the trading stock deficit account. It will be debited. Why? Because it's an expense account. To show the effect on the accounting equation, first of all, the 100%, the original cost of the stock that we've lost, assets minus 7,500, owner's equity minus 7,500. To show what the insurance company agreed to pay us out, assets plus 6,375, owner's equity plus. To show the trading stock deficit, assets minus owner's equity minus 2,500. In our financial statements, loss due to water pipe burst, 1,125. Trading stock deficit, 2,500. In my balance sheet, inventories, my new balance, 88,000. And trade and other receivables, what the insurance company agreed to pay us out, accrued income, 6,375. Now I want to point out the following. There's a reason why I've put insurance in the pre-adjustment trial balance with activity 8 and 9. The insurance claim has absolutely nothing to do with the insurance account. The insurance is my monthly operating expense. No adjustment was made to the insurance, so in my income statement, insurance would reflect 23,000. The same in activity 9. My insurance from the pre-adjustment trial balance was 50,000. The insurance claim has nothing to do with the insurance account. It is an operating expense. When we claim from the insurance, whatever they paid us out will go into bank and it will go to loss due to. Whatever they're still going to pay us out, accrued income is debited and loss due to, whatever the reason may be, is credited. Thank you very much. I want to leave you with this quote. Stay positive, work hard, and make it happen. Our next adjustment activities, we're going to focus on bad debts and bad debts recovered. Hope you have a wonderful day.